Welcome to the channel. Today we're gonna take a look at the portfolio, how it's doing. I have both dividend stocks and index funds in the portfolio, and let's go through it. First of all, the investment strategy is to invest 10% of the monthly income and aim for 50% index funds and 50% dividend stocks. Not try to do any impulse purchases, always do your due diligence. Invest in strong brands and no unprofitable companies, and then just sit back, enjoy the dividends start rolling in. And to the left we have Terry Smith, and he symbols the quality of the companies I want to invest in. He invests in high ROIC companies, and to the right is Warren Buffett. He's more of a value-oriented investor, so I try to combine both those theories. Let's go to the tracker and see what type of companies is actually in the portfolio. Let's see here. We can sort on the amount of return. The worst performer is SBB. It's a Swedish real estate company that invests in government buildings, police station, fire stations, and universities. Next up is T. Rowe Price Group, and they had a minus 9% return. Here in the spreadsheet I can actually change to see for a year how it has performed, and we can see T. Rowe hasn't been a great yearly performer, minus 42%, so I have been buying it quite lately. Next up is TSM. TSM is doing great when I'm recording this. It's Thursday the 7th, up 6.9%, but I'm still minus 8% on this investment, and yeah, this year it's down 31%, well actually a year back. Next up is Investor. Investor is like the Swedish Berkshire Hathaway. It's an investment company, and here we have a return of minus 6.8. Next up is HBQ. It is a return of minus 7%. Next up is Starbucks, and here we have minus 4%. Starbucks hasn't been a good investment year back, minus 32%. Next one is Stanley Black & Decker, and here we have a return of minus 3.86%, and during a year they are minus 46. Next one is 3M. Here we are almost break even, only minus 1%, but on a 365 day basis they are down 35%. Next up we have JP Morgan, and here we actually finally can see some positive return, plus 1.5%. JPM is down 25% though during this year. Next up is Home Depot, and here we have a 3% return. After that, Comcast with a 3.8% return, and we have UPS that I bought in quite a dip, so I'm quite happy with that investment, 10% return. Then we have Visa, up 6.7, Merck up 12.5, Johnson & Johnson with a nice almost 22% return, and Realty Income with 14.8% return. So that is the whole portfolio, and here at the top we can see the totals. Annual yield of $770. The current yield of the portfolio is about 3.3%, and the value is $23,387. I started this portfolio about 1.5 years ago, and for now it's minus about 1%. Dividend stocks 23,387, and here are the ETFs I invest in. It's index funds, global about 70%, Swedish index funds 15%, and emerging market about also 15%. And the total for the index funds are 21,656. It's updating as we speak because I put in the values in Swedish kronors, and then it exchange rates to US dollar are updating live. Next up, let's see what dividends I got this month of June, I got $4 from SBB, $9 from UPS, $7 from Johnson & Johnson, $10 from 3M, $4 from the monthly dividend payer Realty Income, $11 from Home Depot, and $10 from Stanley Black & Decker, and $17 from T. Rowe Price Group. That makes up for a total dividend of $72 for June. On the next tab I have some graphs. To the top left I can see how my combined portfolio is doing, dividend stocks and index funds. Now during the bear market correction I've actually invested more heavily into the market. Try to buy when stocks are on sale. To the right is the monthly dividends. Bottom left is a sector allocation. The light pillars are the actual sector allocation, and the bit more blurred out ones are what I want to own. So for example, I want 15% in consumer staples, but I have 0. I think I'm gonna try to cut down a bit on consumer discretionary and hunt for some consumer staples and also a material stock. And I have my wanted list here, but the thing is the consumer staples are trading quite high. This is the average price compared to its 200 days. So we can see, for example, TSM that is on my wanted list is trading minus 25%. But yeah, consumer staples like Hershey is trading 10% above its average price. That was it for the portfolio update. Hope you guys liked it. Please leave a comment if you have any suggestions for further videos, and subscribe to the channel. See you next time. Bye.